If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you.
Happy 2025, Vic.
Yeah, Happy New Year.
How was your holidays?
I had a great holiday. We went to Europe, did a little skiing, and then my wife got sick, so it got kind of cut short and all kinds of trouble getting back and things. But great to be away for a little while.
Where were you in Europe?
I was in the Dolomites, which is in northern Italy.
Oh, yeah, Italy.
Yeah, it was great. I'd never been anywhere skiing in Europe. Kind of different than here, but fun to check it out.
That's awesome.
Yeah.
That's awesome.
How about your holidays?
Mostly here, very good. No health issues, which, to escape the holidays without a health issue is actually a real blessing. Had both the boys home, which was really cool. Able to do Christmas at the parents' house. It was pretty great.
Good.
It was pretty great.
Good.
We're watching our oldest dog, Ronan. He's a Australian Shepherd, and he's brilliant. He's a super smart dog.
Yes.
Otherwise, I don't think I would do the dog sitting thing. But he's really, really smart. So it's getting me up in the morning. We're taking these long walks around the neighborhood,
nice.
which is good.
Yeah, those dogs are smart. I mean, I know one that can open doors, just like so.
It's like he can understand everything we're saying.
Yeah.
It's pretty amazing. But also because they're so smart, like you got to watch them.
Yeah, that's right.
You know what I mean?
Yeah.
Because they are.
Yeah, they can be mischievous too.
Absolutely.
Yeah.
Absolutely. Well, we have a pretty slow week. Basically, we're recording this. It's January 2nd.
Right.
Some people aren't even like back to the office. I was walking around.
Yeah, it's quiet around here.
It's super quiet around here. So, but I love the fact that we're back day 2 and
we'll cover the news that's out there. It's been a slow week which is expected. But good to start thinking about 25.
And also, we're going to ramp up so quickly in January. We've got JPM. We've got, earnings for Q4 will start to roll out in the next couple of weeks. And then we've got the inauguration. So
that's right.
January will be the slow show for sure.
Before the storm. Yeah,
exactly.
Yeah.
So without any more pre-talk, let's go ahead and dig in. You found this article in the Wall Street Journal kind of recapping the last 2 years of the stock market. It's been remarkable, right? I mean, it's hard to be in our industry when the stock market is performing this well. You're like, we're supposed to be here to beat the market and create outsized returns. And it's kind of hard because there hasn't been a lot of liquidity, because there hasn't been a lot of deals, and the stock market has been on an absolute tear.
Yeah, the S&P 500, this chart, if people are listening, the last 2 years has been over 20%. It's like 24%, 23%, which is incredible.
It's incredible.
Yeah.
But you were wise enough to pull out the healthcare index and give us a bit of a comparison. Maybe not for the last 2 years, because I think 2023 was a pretty good year for the healthcare index overall.
Yeah, I just felt like when I was reading this story, I don't feel as buoyant, as excited as the story would imply. And so that's made me look at the XLV, which is sort of the segment of the S&P 500 index that covers all the healthcare holdings.
Right. So last year, I mean, when we think about what the year was dominated by in terms of storylines, we entered the year with all sorts of concerns about Medicare Advantage, right?
Yes.
The health systems had kind of rebounded by the end of 2023 and were looking good heading into 2024.
Yeah.
But Medicare Advantage had really started to sour the market on several, not all, but several of the payers who are out there. Humana sort of being the number one. That was like the storyline we entered the year with. Shortly after that, we had the Change Healthcare issue.
Yeah.
But that actually didn't have a big impact on healthcare stocks, and in particular, like United stock. It really did not meaningfully impact their stock price. But then as the year started to go on, inflation continued to sort of tick up and be a little bit more stubborn. And so that presented issues from a labor perspective for the providers. There was a probably more aggressive eye looking at pharma that was not GLP-1.
Yeah, right.
If you didn't have a good GLP-1 strategy, your pharma stocks may have taken a bit of a beating. And then we had the CVS story,
right?
Land, which was pretty devastating.
Yeah, definitely.
And scary, I think, for the entire payer sector. And then tragically, in the beginning of December, Brian Thompson was murdered.
Right.
And that had an impact across all the payer stocks, really because of public sentiment,
right?
Which I think was unexpected. A CEO of one of the largest companies in America was murdered, cold blood, broad day, for all intents and purposes, in broad daylight. And social media's response was to not, focus on the murder, but to focus on America's dissatisfaction with the healthcare system writ large, and that had an impact on stock performance.
Yeah, I mean it was shocking to have one of the management team of a great company get murdered, but I was more really shocked and disturbed by the social media outpouring of hatred and vitriol against the industry.
Yeah, and support for a murderer.
Yeah.
I mean, straight up support.
And I think that the stock market prices reacted to that. Like people realized, oh gosh, there's a lot of sentiment against this industry.
Yeah.
And they just maybe sold without thinking too much about it.
Yeah.
The other thing I think is that, so those are the things that impacted healthcare. We didn't get the positive side that the S&P 500 did around AI. And sort of the cloud, additional needs for cloud infrastructure. So I think a lot of I didn't pull it, but the Magnificent 7 or 8, whatever we're on now, that top 10 individual companies in S&P 500, I think, drove a lot of the gains, and there are no healthcare companies really in there.
No, and this chart that you have comparing the two, I think what is really standing out to me is, sure, you've got the overall index, sort of outperforming, but the shapes really do match up until around September, and then they diverge, where healthcare takes a nosedive, and the S&P climbs from about 15% to 25%,
right?
By the end of the year. So that is another sort of interesting thing that makes me want to look back at Q4 in its entirety, right? Because Brian Thompson was murdered in December.
Right.
There was a lot happening across September, October, November. I wonder how much of this was the CVS stuff, but I think it's going to be worth looking back, especially as we put forth our first quarterly report of the Health Further brand to kind of say what really caused that divergence.
Yeah, we'll have to pull out the different factors and how much each one had weighting on it. But I think the uptake of COVID vaccines was pretty low. That really hurt Pfizer and there's one other company, I can't think of the name right now.
BioNTech?
Maybe, yeah. And then I think as the Fed started cutting, I think that's negative for healthcare. It's gonna drive inflation.
Yeah.
And I think although it helps the stock market, I think it hurts the long-term outlook for healthcare more than it helps, really.
Yeah, agree. So thanks for pulling out this kind of overview. Next article here from the Wall Street Journal: Trump's return sparks hope for 2025 deals revival. I mean, this is just sort of what we're all hoping for, right?
Yeah. I think that there is a lot of hope that there's going to be a friendlier kind of FTC, Justice Department for M&A. There'll be more support from the Oval Office for the stock market, and that will lead to deal making, which I think probably makes sense. I think there's a lot of potential deals that boards have been talking about for years that they just didn't think they could get through,
right?
That now, hopefully, they will.
I mean, I do love the byline here, though, where it says deal makers say less regulation, lower interest rates, and rising stock markets could fuel activity, but in quotes, people really don't know, one banker says. I mean, that's how I feel about it, right?
Yeah.
It's like there are all these things that line up in such a way that it feels like we should be able to get more deal activity, particularly the regulatory environment. I mean, I think that one is pretty clear.
Yeah.
Regulatory environment will be favorable. I don't think there's any question about that. But the people really don't know part is kind of something that I'm feeling, and I'll tell you what I'm wondering about. Okay. It's kind of related to the last topic we were discussing about the S&P, right? Even within the S&P, there's been this multi-year pull away that has created the Magnificent Seven, and I guess I'm just wondering, we're now at 2025, right? So we're in our 5th year of the 2020s. So the 2020s have been very weird.
Yeah. Yeah, COVID was 5 years ago.
I know.
Seems like a long time ago.
It's insane, right? Yeah. So we're now in our 5th year, right? And I'm just kind of wondering, do we think that there's been enough fundamental change and consolidation in the market that deal activity just is not going to return to what it was prior to the 2020s? That's just a question that I have. The makeup and the structure of the market, the competitiveness of the market, and especially as things are now aggregating around AI, and that is the momentum. We've been discussing since we first started taking AI seriously that it's a big tech game at the end of the day. At the end of the day, it's a big tech game, right? I mean, and it's going to be a winners take most kind of market opportunity. And so, I don't know. What are your thoughts on that?
I have sort of two thoughts simultaneously. One, I think there's many fewer publicly traded companies than there have been ever before. It's been declining, and the market cap of the ones that are there are much bigger. Yeah. And so that means there's fewer small deals to get picked up it's not really big public companies buying small public companies. It's more like private being bought by a public company. Yeah. And so I think that might limit the number of deals that can happen. Yeah. But I also think there's a pent-up backlog of deals that just didn't get done over the past 2 to 4 years because the regulatory environment was preventing it. Yeah. And so there may be, I think there could be a decent uplift in M&A activity.
Yeah. I also think about some of the fundamental impairments between labor and AI that at least are being bandied around SaaS, and what percentage of enterprise venture capital is in SaaS as a business model. Yeah. There are just some kind of systemic things that, okay, we're going to have a Trump regime that is absolutely going to change the regulatory environment. Right. That's going to be good for M&A. That there's no question about. But there's all these other much more durable things, right? That as we are in 2025, I keep saying 5th year, but we're in the 6th year. Like as we're heading into this back half of the 2020s.
Right. Yeah, it's the second half of the decade.
Yeah, as we head into the back half of the 2020s, how much of what has formed in the first half is durable and can't necessarily be undone by a more relaxed regulatory environment? That's a question I just don't understand. How to fully think about it.
Yeah, I don't know. I think that we hit kind of a globalization peak right before COVID, and that now we are kind of retracting to more onshoring, or at least maybe U.S. and Europe aligning, and then Russia, China, other groups not aligning. That's going to drive expenses, right? Costs up. It might lead to M&A activity. It also might lead to new ventures, new sources of supply chains and things. Yeah. I don't know. Healthcare is so location based, right, that I don't know how much the kind of globalization deteriorating and going to more of a maybe not U.S. only, but certainly a U.S. first and onshore sort of thing will affect healthcare. Yeah. So I don't know. I think it's
and then I guess maybe the other theme about the Trump administration is, in particular, as it relates to healthcare, I would say, generally speaking, it does not feel terribly incumbent friendly, right? Which could drive more deal activity in and of itself, right? Just because it's not going to regulate an incumbent out of existence. I don't expect, but I think it will increase the potential for competition with incumbents, which, healthcare has used the regulatory environment to stifle competition, quite frankly. So lowering some of those regulatory barriers to creating a more competitive environment in healthcare specifically could be the thing that really drives more deal activity in our industry.
Yeah. I mean, I think that'd probably be healthy. I think whether it leads to more deals or more impactful deals, I don't know. But
well, if you believe in the free market,
then
I think you would believe that is healthy.
Yeah, that's my belief. Yeah. I'm more of a free market guy. So I think incumbents have plenty of advantages, and I don't think the government needs to give them more.
Totally agree with that. All right, let's keep moving. One VC deal to cover.
One deal was announced in the last 2 weeks.
This actually was December 18th. So Scripta Insights raises $17 million in Series B funding, $42 million in total. So tell us about this company.
Yeah, so they're sort of a pharmacy benefits navigation company helping large employers with their employees get their drugs more effectively at better discounts, and they're raising money to grow. And so I think it's a positive thing. This is not a new concept, but good. I mean, I've been trying to navigate some drug stuff with my wife and teaching her about how the pharmacy benefit world works. And there's a lot of money you can save.
Absolutely.
And so I think it's good to see it get done. It's been a quiet time.
Yeah. This is from Wall Street Journal Pro, so most people will unlikely be unlikely to access this. But this is talking about a bill that is making its way through Congress, bipartisan support, trying to sort of address the situation that the healthcare industry has found itself in as it pertains to cybersecurity issues. 2024 was the year that the lid was just blown off. No one was safe. The absolute, biggest, and I would say probably best performing tech and data healthcare company is United Health Group.
Yeah.
If you know how many tech workers they have and like what their investments have been in that over the course of the last 2 decades, I don't think there's anyone who's stronger in that capacity than them. And of course, Change Healthcare did come through an acquisition, but still, I mean, it's their asset. Yeah. And that was a crippling cybersecurity event. Yeah. Right.
And it shows me that anyone is exposed.
If they can get exposed, anyone can be exposed. Yes. Right. Yeah. So what's sort of the approach that these lawmakers are taking? So this approach
is, it would mandate that all healthcare data that is covered by HIPAA, which is almost all healthcare data, would have to be encrypted at the source, so that if it did get exposed, it would be useless. Yeah. And that sounds good, but it's going to be very expensive.
Oh yeah.
Because in order to encrypt it, then you have to have a way to unencrypt it to use it and keep it all straight and everything. That's not a cheap proposition. And so HHS and Congress are both kind of coming at this through different means, but it's bipartisan in Congress, and HHS, of course, is going to change leadership, but is pushing it as well. They estimated it to be $9 billion, I think, in the first year, and then $5 billion every year thereafter. And I don't see how the industry I don't know where that money comes from.
Yeah, is HHS going to change the payments coming out of CMS?
No, I doubt it.
To support that kind of. I mean that sounds insane. We've been talking for a while about how there's something pretty wrong around the regulations requiring healthcare providers to store and maintain this data digitally, and not thinking about the economic impact of that, as well as the honeypot that they created when they did that, and now adding on additional expense requirements to these providers. And oh, by the way, they're healthcare companies. They're not tech companies. I mean, you know, we're talking about United. Now we're talking about a healthcare company that's also pretty much a tech company.
Right.
But like the vast majority of these healthcare companies are not.
Yes.
They don't have that capability.
Right. So they would have to hire a vendor or something to do it for them.
Yeah.
Which
Creating
is
a
gonna be
whole new
very
vendor
expensive.
industry.
Yeah. Very expensive. Yeah. And I just don't think it's workable. It is a access point that we need to try to close.
Sure.
But I don't see this really being feasible.
Yeah, and look, I mean, it's kind of weird, but in 2025, it's more about the ransomware and the keeping these hospitals up and running than it is the sensitive data.
Yeah.
All the data's been hacked. It's like
that's my view. Is my data's I'm sure out there 15 times.
I mean, between Change Healthcare and Equifax a million years ago, it's like my stuff's out there.
Right.
My stuff's out there. It's like whatever, right? So you can't say that the reason for this is to protect data. No one is able to protect data. It's about ransomware and it's about shutting down Lurie's Children's Hospital, right?
Right.
For however long it was shut down. It's about making sure that people are able to get
But encrypting the data
care.
would not solve that.
I don't. Well,
I guess it depends how you encrypt it, maybe. But
yeah, I mean, I guess encrypting the data is a different thing than taking control of the network and shutting down the network.
That's what I mean.
Right?
Like the ransom is usually
network control.
The owner doesn't have access anymore.
Yeah, network control.
Right.
Well, back to lawmakers and regulators who, you know, have to come up with something.
Yeah, their constituents, the voters, are upset that their data got out there.
Right.
So this is the natural response, but I don't think it's workable.
Yeah, it's a really gnarly problem. Right?
Yeah.
All right. So Elon Musk and Donald Trump, but it's, you know, here's the thing. I'm not on Truth Social. Right.
Yeah, I'm not either.
And I feel like I need to be because all I ever see is like screenshots of what Donald Trump is posting, and he is the president. It's getting to the point where Truth Social is not this fringe thing. It's his press office. He does not directly post on X. He posts on Truth Social.
I know.
So what I see is Elon on X.
Yeah, right.
You know what I mean? And I just saw Elon going nuts about the stopgap bill, right?
Yeah, so Two
covered
weeks ago, we covered it, and we were covering it on the day that they were debating it.
Right.
And then that night, I think Elon, I'm not on Truth Social either, so it's hard to get the exact timestamps, but I think Elon was running in front of Trump. That's what it seemed like.
Yeah, I mean, I again, I'm not on Truth Social, so I can't say. All I see is what Elon does. I don't see what Trump is doing. But on X, oh my God. Like he was basically
he killed the deal.
He killed the deal.
And the way he did it, I have never seen before. I don't think it's happened before, but we need to ask Emily. He has whatever he has, 200 million a lot of followers, and they started calling their Congress people.
Them. Yeah, he just inundated them.
Because the people on X will do what he says. And the continuing resolution did have a lot of extra stuff, often called pork, in it. And one of them was this pharmacy benefit managers kind of restructuring, which I think was going to be healthy, really. But everything that wasn't directly related to continuing the government functioning got cut out.
Yeah, to include the PBM.
To include that, right? Yeah. Exactly.
So this Wall Street Journal article is the headline is "Drug Middlemen Spared by Trump and Musk for Now," but PBMs are facing intense pressure, and I don't believe they're going to be spared. I mean, Elon has been retweeting and sharing more and more charts on healthcare. Yeah, and so I think part of Doge is going to be a deep dive on healthcare. You have to.
I mean, it's such a big part of the budget; they have to do it.
You can't be serious about cutting government spend without taking a hard look at health.
Yeah.
Right. Fierce Healthcare pulled together what I thought was a really nice article on the 2025 outlook for hospitals. And they pulled in stuff from Moody's and Fitch and HFMA and Kevin Holleran, who is Fitch's kind of top guy when it comes to credit ratings and stuff. He's actually a member of the HFMA board with me.
Oh yeah,
and so he's like really sharp guy. So when I was reading this article, I was like, oh, if Kevin, if Kevin's quoted in here, like that's real stuff. What stuck out to me in this article was that Fitch has in early December bumped the credit outlook for the nonprofit hospital sector to neutral from deteriorating, right? Yeah. And that to me just seemed to be a really big deal, because these credit ratings are fulcrum for these hospitals in terms of their ability to issue bonds.
Only way they can raise money.
Issue bonds, right? I mean, and so getting something, moving from deteriorating to neutral, even just like for the layman, that sounds incredible.
Yes,
right.
Right.
that sounds like, oh, deteriorating bad, neutral. Right. Is what it is, kind of thing, right? So maybe not awesome, but not deteriorating. So that to me, that's a huge boon for the nonprofit sector.
Yeah, I think that's right. It's going to be, I think it's going to be a challenging year, and you're going to have to operate your health system well.
No question. But
the environment is set up for health systems to perform. They have good volume. The acuity is pretty high. The labor costs are likely to increase with inflation, but if you manage it well and you start reorganizing your operations and things, I think you can work through that. So yeah, I think it's, in general, 2025 is going to be a neutral year. It's probably not a blowout year, but a good year.
Yeah. I agree. So anyway, this is a long article. They cover multiple aspects of hospital operations. Right. They talk about revenue growth, margins, shifting site of care, et cetera, et cetera. We'll put the link in the show notes. Definitely worth a read.
It's a good summary.
Yeah, definitely worth a read if you're kind of thinking about what are the hot topics for hospitals and sort of what does it look like they've got headwinds and tailwinds, right? All right, this is I think kind of the special interest, tending to us section of the show. Wall Street Journal, the headline is "Money Can Buy a Longer Life to a Point." First of all, why did you sort of gravitate to this particular article, and then tell a little bit about it?
Yeah, I'm kind of interested in wellness and longevity, kind of the health and us, whatever the categories we would. Yeah. And then I think it also is sort of related to the K-shaped economy. Yeah. Where like if you have funds, you can buy healthier food, you can organize your life where you get more sleep and you have people helping you with things. And that results in, we can pull it up, it's down, it's maybe like 10 years longer of life. If your net worth is from 0 to whatever the bottom 10% is, 100K or maybe 50K, your expected lifespan, median lifespan is 72 years. And in the top 10%, it's 85, almost 86 years.
Makes sense to me.
Yeah.
When you get up there, the bottom line is, I mean, forget about what happens earlier on in life, because I think what's interesting is for people who are between 72 and 85, we've had kind of minimal wellness, longevity stuff in their lifetime, right?
Yeah,
by the time they're that age, we don't really have a whole lot. What we do have is, what does it cost to keep you alive once you get that old?
Yeah.
And here's the deal. It ain't cheap.
Right.
It ain't cheap. Medicare is helpful.
Yeah.
But it doesn't
cover.
No, man.
Yeah.
It doesn't get the job done.
Right.
It doesn't get the job done by itself, So, yeah, I mean, I think thinking about what the cost of end of life is and extending someone's life once they enter that sort of 65 and plus band is one way to look at it. And I think you and I, in our late 40s, early 50s, are looking at it slightly differently, right? I mean, like my son's 25, he's not thinking about mortality at all, right? Right. But for us in our late 40s and early 50s, the fact that our net worth is, not at the lower end, we are investing in our health. We're investing in more diagnostics. We're investing in more preventative measures. Yeah. We're investing in, even the food exercise, the food we eat.
Like all of the stuff on the outside of the grocery store, all the fresh produce. it is more expensive and the shelf life is shorter.
Shelf life is shorter. Yeah.
So my wife goes shopping probably 3 to 4 times a week. And not everyone can do that if you're working 2 jobs and running around trying to earn money in an hourly job.
Yeah. And then sometimes, you're at work and you didn't bring in food. And, I've seen you come back with an E-Rose bowl. You know what I mean? And,
yeah.
That E-Rose bowl is really good for you.
Yeah.
And guess what? It's also not the cheapest thing you could be buying
right.
on in downtown.
Yes.
Right?
That's right.
So yeah, I mean, I think, yes, this is definitely a pretty big area. I recently joined the board of Nashville Health, which is Senator Bill Frist, nonprofit that he started. And I think the reason why I joined is because there is this fundamental understanding that health is tied to wealth.
Yeah.
And you can't look at how health, it's when you're looking at the zip codes and you're looking at the health outcomes, you're also looking at, what's the wealth disparity that's here.
Yeah.
And they're so closely correlated, it's just not even worth talking about. You know what I mean?
Yeah. And this article talks about it too. It's related to the built environment and what crime is like in your neighborhood and just a lot of things that are eventually tied to net worth.
Yeah. I mean, this is kind of an obvious point, but I think now that the health and wellness industry and concierge doctors and these diagnostics that are not covered by health insurance, but you can still get on your own. Now that this industry is becoming more and more robust, I think this point is going to be, more extreme, right?
Yeah. And we're going to have to decide as a society what should be included in Medicare for everyone,
right?
Or on the standard insurance company benefits,
right?
And what is add-on and extra, and is like getting caviar or something. You don't need it to survive, but you could pay for it.
Yeah, exactly. Moving to the AI section, Commure acquires patient navigation platform Memora Health. Commure has
they just keep going.
Yeah, regularly. Every time we say Commure, we can swap it out for General Catalyst, right? But Commure has been very, very consistent in their acquisition and building out kind of a comprehensive health IT platform for hospitals.
Yeah, and they are. I mean, it's only 2 that I can recall, but they bought Augmedix, I think. Is that how you say it?
Yep.
They bought Augmedix, which was like $100 million publicly traded company, but pretty small. And now they're buying this company. It was not released, but they had raised about $80 million in capital. I'm starting to see a trend of them buying kind of companies that have decent product market fit, but they're not really a full-scaled company. It's more like a product point system.
Right.
And General Catalyst is acquiring it, putting it in Commure, and that's an interesting strategy.
Yeah, but they're not seed stage companies.
No,
right?
these are $100 million to $200 million acquisitions.
Right. Exactly. Augmedix was a small cap stock.
Right.
I think that Memora was not publicly traded, but as you said, $80 million in. Right. A16Z was an investor.
I would think they got some kind of return for it.
Yeah. So they're pulling in meaningfully invested in products, but maybe not platforms.
Yeah.
To make them part of this much, much larger platform. It's an interesting play because the integration and the value proposition has to be about how you combat Epic. I can't see another player out there, or even Oracle Health, I think, is going to be positioning against Epic.
Yeah.
Ultimately, and I can't see how you can look at what Commure is doing here and say, okay, well, who are they trying to take out in the market? Who is their incumbent that they're going after, right?
Yeah, they're trying to create the Epic replacement. Epic was created in the 90s.
Yeah.
And then, of course, benefited from the whole EHR land grab. And it's good technology, but you could reinvent that same set of services much more effectively. And I think that's what General Catalyst is doing. They bought that health system to sort of have a testing ground. But the knocking off the incumbent, going back to the incumbent discussion, Epic is very entrenched. And so I'm excited to see Commure and Oracle fight against them, but it's going to be a long process. They're pretty entrenched.
Yeah, they're pretty entrenched, and I guess the one thing that I will give to both Commure and Oracle is they both seem to be acting with a sense of urgency because Epic is so entrenched and has been eating market share at a pretty good clip. There's not a lot of time if you want to, if you want to go capture the green space that they haven't already captured, because I haven't talked to a whole lot of hospital CEOs who are in with Epic who are anywhere close to changing.
Yeah.
So it's like I feel like you got to go after the green space, right? And get to somebody who's not currently on Epic, because getting them out of the Epic religion is going to be pretty hard.
I don't think there's that's going to be hard to build a business just with the things that are the platforms that are not on Epic.
Well, they don't have they're not quite at 50% even of the market yet. So that there's still a majority of the market that's not on Epic.
Yeah,
to my understanding. And Cerner's already starting with a pretty good clip.
Yeah.
I mean, Oracle's in good shape.
I think Oracle's could build from a low 20% market share to 40 or something.
Yeah, for sure.
But the number of health systems that are on either Cerner or Epic.
Right. Now you're starting to talk about 70% probably.
And so for Commure, I think you need to have some kind of adjacent strategy to begin pulling Cerner and Epic clients for point systems at least. But Epic and Cerner both are pretty hard. Tied in. It's hard to do that.
It's hard.
I don't know. I'm excited that General Catalyst is doing this because I can learn from it. But it's going to be a long road, I think.
The thing is, I believe the people at General Catalyst are smart people, and I just wish I knew what their strategy was. You know what I mean? Mm-hmm. I believe they have one. I don't believe they've communicated it, but I believe we're picking up clues from all the different moves they're making, and we're trying to kind of piece it together. That doesn't make a strategy, right? I would love to know what their actual strategy is, because we were talking before we hit record that at this point they're not behaving like a venture firm anymore, right? I mean,
yeah, I mean, acquiring businesses, taking a company private or buying a company that, I don't know what the terms were, but they raised $80 million. Those aren't typical venture deals.
No.
They're almost like a multi-stage asset management company.
Yeah, that's right.
And buying a hospital is not a VC deal.
Definitely not. Yeah. Definitely not. All right, and last story, what your face age, in quotes, can tell doctors about your health. So this is a story about how AI and also even just doctors, intuition, leveraging sort of basic knowledge about your face actually is a diagnostic tool and can tell people, how healthy you are, but also what kind of the severity of treatment that you can withstand.
Yeah, and I think it's interesting. I think doctors have, particularly in cancer care, is where this article talks about it. Brigham and Women's has a doc from the oncologist at Brigham and Women's, and he was trying to figure out, could he give an 82-year-old chemo regimen? And he had this gut level feeling that, he seems pretty healthy. I think he maybe could withstand it. And that judgment forever has been the doctor's role.
Right.
And it's very nuanced and hard to tell, really. And patients don't always tell the truth about. Every patient tries to say to the doctor that they are feeling good and put on a good face because they want the chance at the chemo. And so this is a tool now that the doctor can use that takes an image of the face, and then there's a whole bunch of different aspects of the face that is indicative of wear and tear, aging, kind of stress on the body. And so, so as a 90-year-old, and he used the face age tool because he thought he was probably a little bit younger and more healthy, and was able to just give him a little more comfort that, okay, this patient can withstand the chemo, and was successful. So it's early, but they're looking at your eyes and the bags under your eyes and different wrinkles and all kinds of stuff.
Yeah. So, I mean, just another way that AI is going to play a role in healthcare.
Yeah.
I thought this was a great story for you to highlight, because this is not something I would have thought would have been viable in the healthcare setting. But you could really see how this is a critical decision assisting tool, right?
Yeah, that's right. And I think I'm really interested in diagnostic inputs that are low interaction, like low acuity, where like take a picture of my face pretty easily,
right?
Draw a little bit of blood easily. Go sit in an MRI machine for 2 hours is not that easy.
No.
And there's only so many machines like that. So there's a fixed cost thing. So I think we'll keep seeing more and more of these really adjunct diagnostic inputs. But as we get more and more of them, I think they could start having impact on things.
Yeah. All right. Well, look, it's January 2nd. I think you did a pretty good job pulling together a show, given the fact that everyone's
not that much news
crawling out of their holiday hole.
Right.
But yeah, I think next week will be much more robust, and as we have discussed, the following 2 weeks will be crazy.
Yes, that's
totally
right.
crazy.
It's going to be a busy year. I'm excited about it. I think it'll be fun. There'll be a lot of change, and we'll see. We'll be here to cover it.
Yeah, absolutely. So, see you next week, and hopefully there's a lot more deals and more clarity on what the new administration is looking to do.
Yeah, that's right.